Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having an amazing day. We're taking a look here at Pepe, seeing what's going on, help you understand best practice, big picture. We're going to look at this descending trend here that looks like it's starting to become our friend, in which we can see the price action trying to break free from that. We'll also take a look at the daily here and kind of identify the simple moving average here, the fact that we are still above that and we're looking fairly good. Okay, so a lot of positivity here, but we're not out of the woods yet. You just got to recognize that something like this isn't just going to take off out of nowhere. We may have further downside, as we talked about yesterday. We'll go ahead and see if any of those areas from yesterday have been ratified or nullified, whatever you want to call it, to ensure that we're on the right track. Okay. Also, quick note: our Twitter is temporarily on hold for the moment because we just need to verify some additional information. There's a lot of impersonators out there. Thank you so much, by the way, scammers, for trying to defraud the entire country and world. But generally speaking, we have situations like that all over the place, and Twitter takes very strong measures to that. So they're just requiring us to verify some additional information. So we should have it back up and running here in no time. Thank you again to all my Twitter subscribers and followers. Greatly appreciate you. All right, so here's the thing with Pepe. I want to look at the daily and kind of go down from there. This seems a little messy with all the stuff on the chart here, but we're in that support range. That's where this green box is for, just so you know. So we're actually in good shape being in that range, but if we drop below, a little bit on the iffy side, right? We have wicked below, but we're not there yet, so we'll talk about that later if we get there. The key takeaway here is you can't really see it very well, but there's this green line here. That's basically an ascending trend that we're seeing with the 20-day set moving average. It's really common for that to be a trend setter, so until we break below that, we can anticipate the price action moving higher. Okay, and within the next 2 or 3 days, we're going to know if it's going to break above or below, right? But for now, we got to expect it to continue to hold, likely to the upside. Okay, so that's kind of what we're at there on the daily. We can also see that we're still treading water above 50 in the RSI. That's neither good nor bad. The fact that we are above actually is definitely more positive, but we still have low money flowing in here. Okay, so until we get more money to flow in, then we can expect the price action to stay where it's at and probably continue sideways until we figure out a good place. But cool thing is we're working ourselves into an average true range here right at this level, and we're looking pretty good. In fact, if we take a look at super trend here, you can kind of see that we are trending down, but the average range is right here where we're at. Okay, so pretty much good stuff there in that sense. The daily looks still fairly decent. Okay. Now the 4 hours where things kind of get interesting here. So just acknowledge the obvious. We're stuck below both moving averages. You got to keep in mind too, this is a very common characteristic. Just like we saw the 20 with the ascending trend on the daily, we can see the 50 working itself on a descending trend here too. So even though I drew this line out here yesterday with the previous candle wicks, it doesn't necessarily mean it's going to just stop right there, right? In fact, we could even just adjust this upwards to the upper wicks and kind of call it a day. Because in all reality, when you have moving averages like this, those are the ones you want to pay attention to. But the cool thing is trends move with the moving average. Okay, so as we can see, this moving average coming down till we can break above that soundly. Just say we close 175 or higher, we're not going to be in a position to be able to expect the price to go up any further. Okay, so it's just kind of one of those situations that happens. We're getting conflicting information, right? We got a bullish, type of sign on the daily, but somewhat of a bearish sign on the 4 hour. Keep in mind, the longer the 4 hour time frame is bearish, the more likely the larger time frame, such as the 1 day, becomes bearish too. Okay, so we're really close on that edge. So we got to make or break soon. If the price breaks up, great. We'll be in the clear. If it breaks down, we'll have a different conversation. The price will continue lower. Keep in mind, generally speaking, when the price comes up like this here, works itself into a wedge, an ascending type of wedge, it will break out to the upside, basically mainly because it came from the downside. Okay, again, its origin point kind of determines what direction it's going to head. Either way, that is slightly bullish there in that sense. The fact that we're kind of retesting and or potentially broke through that level is good. But you got to keep in mind, though, we're still stuck under RSI at 50. This really, again, this low volume or less volume we're seeing in the last 24 to 48 hours, it really doesn't help us very much. We need more volume to get through that level. Okay, so the bottom line is we are still stuck under some key level resistances. It's never a great sign when you see the MACD on the 4 hour effectively drawing dead. So it really just means that anything could happen at this point. I'm willing to speculate if we look at Bollinger Bands, we're starting to see that compress, and you can see that probably on smaller time frames too. So we'll take a look at that here in just a minute, but let's go ahead and jump onto the 1 hour and kind of see where we're at here. And with the 1 hour, it's kind of cool time frame. It's my favorite time frame ultimately to kind of determine what's going to happen next. Because again, with TD sequential here, we can see we came overextended to the downside, and we didn't come lower than the most recent low. So we are starting to print some parallel lows for the most part, which is positive, but also disadvantageous too, because you think about it, we keep retesting the same level. How much longer is it going to hold? Okay, that's why it's important to establish higher lows. So if this next little push here can't establish higher lows, it's a great chance we're going to see the price action come down from here. Furthermore, if we take a look at the cloud, this is where it gets kind of unfortunate for us here. We still have yet to break above the cloud in this last 24 to 48 hours. So we're having difficulty getting above this level here. You can see this resistance based on the previous information here. Because again, the cool thing about the cloud is it really helps us understand kind of moving averages and effectively like momentum, right? So with the momentum that it has right now, it's not strong enough to be able to sustain this price point above that resistance level, and we keep getting rejected and the price comes down further. So it really just implies that we should expect the price to come down a little bit more before it comes up again. So we got, again, conflicting information. We got these type of trend lines that are telling us, hey, the price should continue higher. We're kind of sort of breaking through some resistances, but we're also having a lot of stronger resistances, such as the RSI, and of course the the 50-day SMA on the 4-hour. Those are both really impactful moving averages and time frames to pay attention to. So to me right now, I've been leaning more towards a breakdown than a break up, even though we have this ascending type of pattern. Even though these patterns are typically, I would say like they're 60 to 70% probable, right? The likelihood of them breaking and continuing that direction is higher. But if you take a lot of other factors that we've seen so far into consideration, the probability of further downside makes more sense than upside, because I would much rather put my money in a combination of a lot of other factors telling us that we're expected to go down than a one indicator or one pattern, for lack of better terms here, that tells us it might go up. Okay. Again, it's really just statistical probability at this point. Statistically speaking, we're more likely to go down than up. But we got to recognize that we still got to be patient and wait for that to happen. Because right now where we're at, we can see that, on the 4-hour, on the daily rather, we're kind of looking at the price action kind of going sideways for some time. So at this point where we've got this point of contention, we've got to break up or down soon. A major move is going to happen soon, obviously. I mean, anyone could predict that. But if it's going to go up, it needs to go up soon, right? If we cannot break this descending trend, then I think we're going to be in a position where the price action will likely continue downwards. So I'm looking for a closure today above like the 175, 180 mark. If we can't close above that level, we're going to be stuck in this resistance level. We're going to be establishing lower highs and lower lows after that. And we're not going to be in a position or a good place where we can find great benefit, right? Or any type of nice long position. So I hope that makes sense and I described that correctly. I try to put things as clear as I can, but there is a lot of different ups and downs potential scenarios right now. I think the best potential scenario for you is to wait for it to choose a side. If it breaks down below to say this 160 range, then I think it would probably be time to consider shorting because there's more likelihood the price will continue lower. But if we can close, just say 175, 180 or higher today, then we'll be in a position where we're establishing higher lows and higher highs. We're staying above those moving averages. We've broken through a relative strength index significant resistance level, and then we can set our sights on the 208 or higher, which is where this resistance zone is holding. Okay, so again, not in the clear by any stretch, but I would say that patience is a key. All right, I know that's a tough word. That's like a 4-letter word in trading, patience, but I can assure you it's very beneficial if you wait it out. I hope that this makes sense to you and it spoke to you well. Once again, regarding our Twitter and everything there, be back up and running here soon, but just kind of friendly advice here, kind of gives us a good example of the fact that there's a lot of scammers out there and you can't trust everyone. So please be careful with who you watch, what you do, who you communicate with online. More importantly, we will never direct message you first. So if you have questions, please by all means reach out. If you're part of our community, just use our Discord and communicate with us. But we're not going to direct message you first or ever try to solicit you. All of our information is on our homepage if you want to go ahead and join us. Okay, it's up to you. All good either way. Day trades are coming very soon, and we also got an exclusive membership or partnership with an exchange here that we're working on to bring copy trading, but more importantly, trading to our United States, Canadian, and a handful of other residents that are in restricted countries that will find great benefit with that. Okay, that'll all be linked to our signals too. It's going to be a really cool situation. Be sure to check that out in your own time. Thanks again so much for joining me here. We'll see you in the next one. Take care.